The American economy is sending to completely different messages. Turn on financial television, and everything looks fine. The stock market keeps climbing. Artificial intelligence companies are worth trillions of dollars. Corporate profits remain strong. Unemployment remains relatively low. To many investors, it appears as though America is thriving. But walk through grocery stores. Look at credit card balances. Talk to renters. Talk to young families. Talk to workers who haven't received a meaningful raise in years, and you hear a very different story. Millions of Americans feel like they're falling behind, even as the economy is supposedly booming. That contradiction is becoming impossible to ignore. Because what is happening right now doesn't look like a traditional recession. In a normal recession, weakness is obvious. Stocks fall, businesses cut jobs, consumers pull back spending, politicians admit there is a problem, everyone experiences the slowdown together. But today's economy is different. The pain isn't shared equally. Instead, America is splitting into two entirely different economic realities. Economists call this a K-shaped economy. One side is moving upward, the other is moving down, and the gap between them may be creating one of the most dangerous economic environments in modern American history. Imagine the letter K. One arm rises sharply upward, the other falls downward. That's the simplest way to understand what's happening for Americans who own stocks, real estate, businesses, or valuable assets. The last several years have often been surprisingly rewarding. Their investments have appreciated. Their home values have increased. Many have benefited directly from the explosion of artificial intelligence. They see opportunity everywhere. But for millions of others, the story is completely different. Housing costs continue to consume larger portions of income. Food prices remain elevated. Insurance premiums keep rising. Gasoline prices swing higher with every geopolitical shock. Credit card debt has become increasingly difficult to manage. For these households, economic growth feels invisible. They don't experience prosperity. They experience pressure. And that pressure is building. Financial researcher Peter Atwater recently described this divide in dramatic terms. According to Atwater, the economy is no longer simply splitting. The upward side of the K appears almost parabolic. Meanwhile, the downward side is falling toward what he calls despair. The result isn't merely an economic divide. It's two entirely different life experiences. To groups living in the same country while experiencing completely different versions of reality. Economic inequality is not new. America has always had wealthy people and struggling people, but something has changed today. Everyone can see the gap. Social media has created a window into lifestyles that previous generations rarely witnessed. Someone struggling to pay rent can open their phone and immediately see luxury vacations, expensive restaurants, private events, designer clothing, and extraordinary displays of wealth. The comparison is constant. Relentless. And psychologically powerful, because the problem isn't simply that some people are rich. The problem is that millions increasingly feel locked out of the opportunities that create wealth. When people believe upward mobility exists, they can tolerate hardship. When they begin believing the ladder itself has been removed, frustration turns into resentment, and resentment eventually becomes something much larger. This is where the economic statistics begin to collide with everyday reality. For many households, survival has become dramatically more expensive. Every trip to the grocery store costs more than it did a few years ago. Housing consumes larger portions of paychecks. Insurance costs continue rising. Utility bills increase. And when geopolitical conflicts disrupt energy markets, gasoline prices often surge almost immediately. Energy prices are particularly dangerous because they spread throughout the entire economy. When fuel becomes more expensive, transportation becomes more expensive, shipping becomes more expensive, food becomes more expensive. Travel becomes more expensive. Nearly everything feels the impact. For households already stretched to their limits, one additional increase can be enough to break the budget entirely. This is how a cost of living crisis spreads, not through one catastrophic event, but through thousands of small increases that slowly erode financial stability. At the same time, America is experiencing one of the largest technology booms in decades. Artificial intelligence is transforming industries. Investors are pouring billions into AI companies. Stock valuations continue reaching extraordinary levels. For some people, AI represents the future, a future of innovation, productivity, and wealth creation. But for many workers, the message sounds very different. Instead of opportunity, They hear automation instead of growth. They hear job displacement instead of prosperity. They hear uncertainty. Whether those fears ultimately prove correct is almost secondary because perception matters, and right now, many workers feel like the benefits of AI are flowing upward while the risks are flowing downward. That perception is helping widen the psychological divide already forming throughout the economy. One group sees limitless opportunity, the other sees increasing vulnerability. Perhaps the most important part of this story isn't inflation or gas prices or AI.its trust. Historically, strong stock markets reassured people, rising markets signaled confidence. Today, that relationship appears weaker than ever. Many Americans no longer view Wall Street as a reflection of their own financial well-being. Record stock prices don't lower rent. They don't reduce grocery bills. They don't pay down credit card balances. They don't make healthcare more affordable. As a result, economic headlines increasingly feel disconnected from lived experience. When official data says the economy is healthy, but households feel worse every month, trust begins to erode. And once trust starts disappearing, economic problems become political problems. People begin questioning institutions, experts, politicians, businesses, the media, even economic data itself. The issue is no longer simply whether the economy is growing. The issue becomes whether people believe the system still works for them. One of the clearest signs of stress appears in consumer debt. Credit cards have increasingly become a financial lifeline for many households. People use them to cover groceries, fuel, unexpected repairs, medical bills. Everyday expenses, but high interest rates make that debt difficult to escape. As balances rise and delinquency rates increase, the pressure becomes harder to hide. This is where a K-shaped economy becomes dangerous. Because the divide begins reinforcing itself. People with assets continue accumulating wealth. People without assets increasingly rely on debt. One group earns money from ownership, the other pays interest for survival, and the gap widens further. This is why some analysts believe the current environment feels worse than a recession. A recession is usually visible. The pain is obvious. The numbers reflect the weakness. But today's crisis is different. The economy isn't collapsing. It's single quotes. Assess EPA rating. One America sees record asset prices. Another sees record financial pressure. One sees opportunity. The other sees insecurity. One believes the future is bright. The other is losing confidence that the future includes them at all. And that may be the most dangerous trend of all. Because recessions damage income, but this kind of divide damages trust. A recession can eventually end. Trust, once lost, is much harder to rebuild. The market may continue rising. The headlines may continue celebrating resilience, but beneath the surface, a deeper question is emerging. Do ordinary Americans still believe the economy works for them? Because the answer to that question may determine where the country goes next.